Welcome to The Explainer. Today we're diving deep into a pitch for financial freedom. But we're not talking about stocks, we're not talking about real estate, we're talking about the life insurance industry. We're going to deconstruct the entire blueprint they lay out, piece by piece. And it all kicks off with this number, $247,000. That's the most one agent, a guy named Junior Corria, made in a single year in this business. So the big question is, how does somebody actually get there? Well, that's what we're going to unpack. All right, so to really get a handle on this opportunity, you first have to understand the story they used to sell it. And it's all built around the personal journey of the man who earned that big paycheck, framed as, a classic American dream success story.
So his story starts in Cuba. He moves to Miami as a kid and then gets recruited into the insurance world at just 18 years old. Now, the story really leans into his early struggles. He admits he had a poor work ethic, spent over 40 hours a week playing video games, but then came the turning point. The pitch says he had this huge mindset shift, and that's when his income just exploded, going from 60 grand a year all the way up to that peak of 247,000.
And this quote right here, this is framed as the secret sauce, the absolute core of his success. The idea is to completely stop thinking like a salesperson who's just trying to push a product. Instead, you start seeing yourself as performing a vital service. And let me tell you, this philosophy is absolutely central to the whole pitch.
Okay, so that's the story. That's the inspiration. But what about the nitty-gritty? How does the money actually work? Let's break down the mechanics of how an agent in this model really makes a living. You see, it's really built on three different pillars. The first one is exactly what you'd think, making money from commissions on your own personal sales of life insurance policies. The second is from annuities, which is a different kind of financial product. And the third, well, that's where the model is really designed to get big, building your own sales team. All right, before we crunch any numbers, there's a key term you've got to get your head around: commission level. Just think of it as your payout rate. When you're brand new, you start at 85%. That means you earn 85% of a policy's first-year premium. And as you perform better, you get promoted to higher and higher levels, taking home a bigger slice of the pie. So let's walk through an example of a standard commission, right? Let's say a client pays $100 a month. Over a year, that's a $1,200 annual premium. At that starting 85% commission level, your total commission is $1,020. See? Pretty simple math. Now get this, you don't have to wait a whole year to see that money. The company pays out about 75% of your total commission right away. That means for just one average sale, you could walk away with around $760 almost immediately. Now that second income stream is annuities. Think of these as savings products for clients who have more money to invest. The commissions here are way bigger, even if they don't happen as often. For instance, if you help a client move $100,000 into an annuity, that could mean a $7,000 commission for you. A huge payday.
And this brings us to the third income stream. And honestly, this is pitched as the real game changer, the multiplier. This is how you shift from earning money only when you're actively selling to generating what they call passive income by building out your own team.
So how does that work? Well, it's all about something called a commission spread. It's super simple, really. It's just the difference between your commission level and the level of an agent you brought in. So if you're at 95% and your recruit is at 85, you earn that 10% difference on every single sale they make. And just look at how this can scale up. It's pretty incredible when you see it laid out like this. With just 5 agents on your team, you could be earning an extra $2,500 a month. But if you grow that team to 50 agents, that passive income, based on this model, could rocket to $25,000 a month. So what does this actually look like for someone just starting out? Well, the pitch lays out a pretty clear year-by-year blueprint for a new agent. It's a projected path to a 6-figure income based on nothing but your own personal sales. All right, so in year 1, the goal is just to build your foundation. The projected net income is between $70,000 and $80,000. Then, by year 2, you've gotten a promotion to 100% commission level, and that income almost doubles to around $137,000. And by year 3, with an even higher commission level, the projection hits nearly $200,000. But here's the kicker. The pitch actually calls these huge 6-figure projections conservative. And you're probably asking, how on earth is that conservative? Well, here's their justification. This entire model completely leaves out any money you could make from building a team. It includes $0 from annuities. It's based purely on your own sales. And they even claim they're using below-average numbers to make the calculation. So, in the end, the whole pitch comes full circle.
It argues that this blueprint isn't just a math problem or a sales formula. It all comes back to character. They insist that real success hinges on three essential qualities. Grit, to handle all the rejection, coachability, so you're willing to learn the system, and a good moral compass, so you always do what's right for the client.
And that really leaves us with the central question here. Are these personal qualities, grit, being coachable, having integrity, are these truly the keys that unlock the door to financial freedom? It's something to think about.